Thank you for watching this video. This is Tony D'Angelo of Aiden and iTech. Now, what this video is all about is about an optimum director salary for the 2020-21 tax year. Now, we're into the new tax year, which is spanning from the 6th of April 2020 all the way to the 5th of April 2021. And if you're a limited company director, whether it's sort of a trading business, a contractor freelancer company, then this video is definitely for you, because what I'm going to look at and what I'm going to sort of help you establish is what levels of optimum director salary there are available for you, how they interact with national insurance thresholds, the different kind of levels of national insurance and the different types, and also pension contributions and state benefits. So, you know, how does that all interact when you make your decision? So what I'm going to do is I'm going to jump onto the laptop and take you through a few examples, give you the numbers, so you as a director of your company can make an informed decision on your director salary for yourself and fellow directors this tax year.
Okay, so here we are at the laptop, and you can see the first presentation slide labeled Director Salary 2020-2021. So just a few basic points to start with. A director salary is paid to a director of a limited company from pre-corporation tax cash flow. So that means basically before any corporation tax is calculated and deducted from your company, a director salary is paid. So in other words, it goes through the expenses line and it comes out completely pre-tax. It can be paid weekly, monthly or annually, despite whatever you hear. However, the most common practice is to pay it monthly, simply being that's how the PAYE system is essentially set up and run in the main. But it's not to say it can't be paid weekly or annually. And it must be administered through a PAYE, pay-as-you-earn payroll system, to include what's called RTI, real-time returns. So guys, in the 2020-21 tax year, now that's a tax year that spans from the 6th of April 20 to the 5th of April 21. There are two key scenarios that you've got to bear in mind when it comes to a director salary. Okay. And the first one here, as you can see on the screen, is scenario A. Your company does not qualify for the NIC employment allowance. Okay, now this employment allowance is worth up to £4,000 a year. Now when I mean £4,000 a year, I mean in terms of secondary class 1 national insurance. If the bill is up to any amount up to £4,000, then basically if your company did qualify for the allowance, it would be exempt. And I'm going to show an example a little later on. Typical scenarios where your company will not qualify for the NIC employment allowance is if you're the sole director of your limited company. Okay, so if you're a one-person band, if your business is doing more than 50% of your work in the public sector, okay, in terms of commercial revenue that's being generated, and if your revenue earnings are within IR35. So this is particularly applicable to contractors and freelancers out there, although in this current tax year now that has been deferred. The new IR35 payroll rules have been deferred until next year, so there'll be less contractors falling within IR35, but it could still happen. Scenario B is your company does qualify for the NIC EIC employment allowance, as you can see here. So and this is a typical scenario where there is more than one director shareholder of the limited company who are paid above the secondary NI threshold. So in other words, you're paid more than £732 per month. The 732 there I put is rounded. There is decimal points to that, but the key here is to get the principle across. And if you are a multi-director or employee company, then the chances are your company will qualify for this NIC employment allowance. So really important to sort of distinguish between the two. So the first scenario, I've termed this scenario A that I want to take you through, is setting your director salary at the primary class 1 NI threshold. Okay, now that's a bit of a mouthful. You don't have to memorize that or anything like that, but just to put it simply, the amount is £792 per month. That equates to around about £9,500 per annum. Now just be, for you arithmetic people out there, there is a bit of rounding going on here, so that the key here really is to get the principal across first and foremost. But the monthly published amounts is £792. You can check that on .gov.uk. And with this level of director salary, it's probably applicable, in fact it's most likely more applicable to those of you who are one person limited company directors, and by being that, you won't qualify for the employment secondary NIC allowance. Now on this level of director salary, there is a very small amount of what's called class 1 secondary NI or national insurance. As you can see below, there'll be absolutely no income tax, and the class 1 secondary is around about £100 per annum rounded, so £99 to £100, so it's a very small amount. And invariably, that £100 is payable towards the end of the tax year, normally in the last 3 months of the last month of the payroll year. Forward, scenario B, which is the personal allowance threshold level. Okay, so in this particular scenario, it's probably ideal that you pay yourself this amount of salary, which is £12,500, and that's a new UK personal allowance threshold, if your company does qualify for the employer's NIC allowance. Even if it doesn't, I've done some calculations to show you how much the tax and national insurance would be. So if you pay yourself £12,500 as a director, it's £1,042 per month. Okay. The first scenario here in this particular example is, I know it's scenario B, but scenario B, let's call it scenario B I, and that is the income tax would be 0, and the national insurance, assuming that your company does not qualify for the employer's NIC allowance, will be £872. Okay, so there'll be a little bit of class 1 employees NIC, all right, which is payable by the employee to HMRC, but it's physically done by the company, but it's on behalf of the employee. And then you've got the class 1 employer's NIC here, £512, which is paid by the limited company. Okay, and I've got some calculations down here. I've done the calculations as to how I got to the 360 and 512. It's down here, so you can study that, and there is a bit of rounding going on. So, you know, the key here is not to sort of, you know, it's not all about the arithmetic, it's also about getting the principle across. So in that scenario, that's what the tax bill would be. Now, if your company did qualify for the employer's NIC allowance, then what would happen effectively is this £512, that would not become payable. Okay, the 360 would be, that still would be payable, but the 512 would not be. Okay, that's what's going to happen, because you can have a class 1 employer's NIC bill up to £4,000 as long as you meet the qualifying criteria, and then up to £4,000 is not payable. And I've done a little example here in this box to show you how it works. So if this is an income statement for ABC Limited, in the expenses line of the income statement, you've got a director salary that will go through, £12,500. Then on top of that, you've got the employer's NIC, this one here, £512. And if you don't qualify for the NIC employer's allowance, then basically that is the total expense. If you do qualify, then what will happen is you'll see another line here, employment allowance, which almost just, it basically just negates the employer's NIC, which does not become payable.
So there we have it, guys. I really hope you found this video useful, informative, and I really hope it will help you make an informed decision in terms of an optimal director salary for this tax year. So if you like the video, please like, comment, subscribe. I'm certainly going to be doing more and more videos, and as I put on the screen, my mission here is to help you know your numbers so you can make informed decisions. And I'm a great believer that if you take care of your numbers will take care of you and your family. Until the next video, all the best, and once again, thank you very much for watching.